Hey everybody, Marty Missouri. Good morning, 16th of May, 2019. Thought I'd update the chart, tell you what I'm thinking. The chart in front of you is like the chart you're used to looking at, meaning it's a 1 day, 1 year chart of the S&P 500. This is a candle chart. The red is down days, the green is up days, and it's live as opposed to the Bloomberg chart that I normally show you that's a delayed chart. Just having a little technical difficulties this morning, so I need to show you this one. But again, we're looking at pretty much the same thing. Back here in September and October, we had what would be called an upward sloping wedge pattern. Same thing here. These tend to be near-term bearish patterns. More often than not, you get a break below. We got that here. We got that here. Notice this sell-off, though, broke right down below what was past support right here at about 2880 on the S&P, and what was once support became resistance in a big way. We had three tops there before we fell apart here in December. Came back, resisted that a little bit, and then successfully tested it just the other day. Now, in light of my view of the rhetoric of late, in light of the momentum breakdown that we're seeing here in the moving average convergence divergence, just like we saw up here, I've actually been anticipating that we actually could see even lower levels than this. I did kind of point to this originally, but I've suggested of late that we could see even a lower move. And of course, we always could. In fact, we could see us go barreling right up to new all-time highs. The market is always dynamic and unpredictable to a great degree. This right here, though, looks for now as a bounce up to and then with momentum just beyond what might end up being some resistance right up in here. So we'll see how that plays out. This morning was a bit of a surprise to me. Our latest news on trade is actually that the president's going to sign an executive order essentially blacklisting Huawei, China's biggest technology firm, from the U.S. markets. Huawei's response was interesting. It wasn't at all aggressive, and you didn't get an aggressive response on that topic just yet from China. In fact, Huawei said we just want to open some dialogue so we can clear up these misconceptions. But the administration is very definite that they are going to go hard at Huawei and do a real number on their ability to do business in the United States. U.S. is also urging allies in Europe and other parts of the world not to do business with Huawei. So far, France, for example, said, no, we don't see the risk. We're going to go ahead. Great Britain is looking at their options. So that'll be interesting to see in terms of that dynamic and how that impacts relationships between the U.S. and Europe going forward. What I think is really big in here, and we saw this yesterday, was a decision by the president not to impose tariffs on European automobiles, which he seemed like he really wanted to do this week. As I've maintained, this is the reason. This is all about tariffs. I mean, technicals were telling us that something could happen. The actual catalyst was notably increasing the Chinese tariffs when China apparently reneged on some of its earlier agreements. So that had the market in an uproar. That made great sense to me. My issue here with this increase, while conciliatory talk seems to always come in from the White House and from folks related to the White House on these kinds of dips, we're not seeing real action. We don't have trade talks scheduled. China actually is now finally beginning to get aggressive in their state media. Overnight, they were painting a picture of the U.S. as a bully who China will not bow down to. China has been amazingly silent up until this point. So it was somewhat of a surprise, and I think it was a surprise among many of the pundits as well that we have this nice green bar here this morning. I welcome it. I think it also has to do with data this morning. We had good housing numbers. And I want to say good. Well, housing starts were up. Single family permits were actually down. And that generally means not so good starts going forward. But on balance, it was a good report. What was also very good was U.S. jobless claims came in at 212,000. They'd been trending a little bit higher. So that was a nice move lower there, and that was positive. And then the Philly Fed Business Outlook Survey was very strong. So despite all of this stuff that I am talking about and am concerned about, the Philadelphia Fed Business Survey was actually robustly positive. So I like that because, as I've been suggesting, we've seen real deterioration in our macro index. It's starting to concern me a bit. We're not in a situation where we're rolling over just yet. Need to start accommodating for the next recession in portfolios, but it's lower than I'd like it to be, and I haven't liked the trend of late. Data up until today that's been announced this week hasn't been that supportive either. So today's data was welcome. Yesterday's news that we're not going to tariff, at least not now, European automobiles was welcome. The Huawei news was not welcome, but apparently right now there's a stomach to buy stocks, at least for the moment. So again, here's the momentum oscillator breaking down a bit, just like it did here. Reasons to be concerned. Here we are bouncing and we're coming up against this level. See how we kind of did that here as well. We broke through a level, then we bounced back, overshot it a bit, and then tested it. So folks, don't be too surprised if we're not overshooting here and then we come back and try these levels here again. We could even go lower, all within the context of an ongoing bull market. Other things, in my view, fundamental things have to happen and have to break down before we start treating this as the next bear market. We're not there yet, but I am skeptical of this here short-term rally. Lastly, just to bring you up to the minute, literally, here's our 1 minute chart for today. This is also the moving average convergence divergence, but on a 1 minute basis. Stock charts are what we call fractal. The patterns that work on a long-term basis also tend to work on a short-term basis. So as I look here at today's rally and consider whether or not we're ready to start deploying new cash, is this a good idea? I'm not getting confirmation in terms of momentum. You notice we had a nice surge here, but notice how stock prices have continued to go up, but my momentum has waned. So that would be a bearish divergence, just like we saw at the last two tops in the market. And here's another one on the relative strength index as well. These are what you would call bearish divergences that do not support the price action. So again, even though I like what's going on today, I like that it's reacting positively to the good economic news. I think there's enough out there on the trade front to keep the market somewhat at bay. And it looks to me like even this rally this morning may be losing a little steam. So folks, again, very volatile market right now. Not a healthy looking market. I don't like what's inspiring the moves in either direction, although I'll say it again, this morning's move on good economic news, of course, that makes some sense to me. This is suggesting that maybe there's some doubt and there's been some distribution. We'll see how it plays out. We'll be patient. We'll continue to study the macro and make our long-term decisions accordingly. Thank you as always for watching and listening, and I'll talk to you again very soon. Take care.